Welcome back, and joining us for an exclusive conversation now is Ragnar. He's CEO at BHP. Ragnar, hi, thank you so much for joining in. First of all, how do you see the copper and iron ore production numbers? What is the guidance really for the year coming up? Even before you do that, also tell us on how the last 3 years have been in sense of production.
Copper production has actually performed very well across our business, and that's been a real emphasis for us, both in terms of the future-facing commodities, looking at growth in copper and also in potash moving forward. And so we have a number of major growth projects across BHP, looking at potential options in Chile, Argentina, Copper South Australia, in Australia, obviously, and our Resolution copper deposit that's a joint venture deposit between BHP and Rio Tinto. So overall, very bullish on that. What we are seeing is we continue to believe that copper demand will increase from 32 million tons a year this year up to 50 million tons going out to 2050. So very bullish on that based on the ubiquitous nature of copper and the demand needs that we're seeing, whether that's through urbanization, decarbonization, or digitization.
Rag, you spoke about copper, but how has iron ore production been? Because we're looking at some dent in case of prices, more production in Australia and various other countries as well. How has that been for BHP?
Look, iron ore, we're very proud of where our business sits in terms of the profitability that it generates. So at the moment, that Western Australian iron ore business is producing about 290 million tons of iron ore a year. And compared to our next nearest competitor, we're generating about a $7 free cash flow per ton benefit, which all up comes fairly close to $2 billion a year in additional free cash flow that we're generating a year out of that business. Now, in the longer term, we do expect that we will see demand for steel sitting at about 0.6 growth globally. We expect that we will continue to see China at that billion-ton mark for the next couple of years before a gradual decline out towards the 2040s.
Like all the upstream and the downstream companies really are tackling with the tariff concerns as well, especially with 50% on copper and steel and aluminum. How have you seen the impact on the businesses yet from these tariffs?
So in terms of copper tariffs, we actually haven't seen an impact to our operations associated with that. So obviously, the decision around, or the anticipation around the 232 announcement in the U.S. that potentially there would see some tariffs come into place, saw a huge dislocation between the COMEX and the LME in terms of the price of copper. Realistically, for BHP, we only sell 3% of our revenue is actually generated from the U.S. And so what we saw was actually strong demand in other parts of the globe. In point of fact, China's copper demand increased by 8% over the last calendar year, which meant that we were able to sell freely anywhere in the globe.
What also is your outlook on copper and iron ore prices from here on? Because copper, almost everybody seems to be very bullish. We've had banks and brokerages talk about $10,000 and $12,000 a ton going forward. Not everybody is bullish, though, in case of iron ore, though.
So in terms of copper, we remain very bullish based on exactly what we were talking about earlier in terms of very strong demand globally and supply looking to be in balance or even potentially a bit of a shortfall. So we think that positions us well and also sets us up for a future given our natural endowment. In terms of iron ore, I think it's important to recognize that our iron ore expectations in terms of China, in China's steel production, was that we would hit that billion-ton plateau. And that would persist for a number of years, probably starting to curtail a bit in the 2030s. What we're seeing at this point is that billion-ton threshold we're seeing in steel persists, and there is still plenty of demand for iron ore in China and other parts of the globe as well. So at this point, the prices are sitting just over $100 a dry metric ton, which is a very competitive spot to be in, particularly with our cost of production sitting C1 cost at $17.29.
Rag, I have one more question, and this one is on India. How do you see India now continuing as a trading partner? What is the kind of demand growth that you're working with? And with this whole tariff uncertainty that India seems to be facing right now, do you see a demand impact from that as well?
I think India is probably one of the most exciting country in terms of growth that we're seeing, both in terms of the pathway and the projection moving forward. So when I look at the abundance of labor, the ambition that sits in that country, and the domestic consumption that's built there, there is a hugely exciting pathway there as we take a look at India moving into being the fourth largest economy we expect during this calendar year. Now, I do note some of the tariffs that you mentioned, but the reality is India's economy is so domestically based that when you take a look at how exports to the US actually import GDP, that's only about 2%, 2.2% actually, precisely in terms of the GDP generation, and only 1% of that, so 50% of the 2%, 1% all up would be impacted by those tariffs, which to me sends a strong signal that India is well positioned, and it is a country that we are doing a lot of work with, both in terms of copper and also to help grow that steel industry.
Rag, thank you so much for joining us. And with that sense there, of course, BHP telling CNBC-TV18 that they're anticipating stronger growth continuing in case of India, especially with the domestic demand there. And then, of course, it is the high metal prices that they're working with as well. All-time highs in copper and some support continuing for iron ore as well. But with that, let's go for a short break. We will get you more on the markets on the other side.